Good afternoon, good evening, good morning from Vancouver, Canada. I'm Peter German, Chair of the Advisory Committee of the Vancouver Anti-Corruption Institute and President of the International Center for Criminal Law Reform. It is my great pleasure to moderate your panel today on the impact of money laundering in the real estate market. With the exponential increase in the value of real estate in many parts of the world, it presents as an attractive destination for dirty money laundered at home or abroad. Real estate is often a perfect commodity in which to integrate the proceeds of crime or can serve as an intermediate stop during the layering process. In my city, money laundering in real estate was recently examined by a public inquiry, the Cullen Commission, which did an exhaustive review of the issue and can be found easily online. The Financial Action Task Force has recognized money laundering in real estate to be a significant area of concern and recently updated its guidance on a risk-based approach to this issue. But you don't have to hear this from me. I'm excited to introduce our panel for today, all experts in this field, and I'm looking forward to a very interactive discussion with them. Our speakers include Thomas Kaplan of Von Paul, Christine Lustig of the Financial Intelligence Unit in Germany, Suzanne Schneider of the U.S. Department of Justice, Andrew Sander of the U.S. Department of the Treasury, and Nicola Thieveson of Kinley, Fulkard, and Hayward. And my apologies for my Canadian pronunciations. It is just a pleasure to be with such a distinguished group of speakers. And we really appreciate the time that everybody is giving to this issue today. So with that as a very brief introduction, I think we'll get right into this issue. We're looking forward to any questions that the audience may have. Please put them in the chat function. And I'm going to, at this point, ask the first question, and if I may, to Nicola. From your perspective of real estate, what are the types of suspicious transactions that are seen most frequently, and what has been the impact on the market? Nicola.
Thank you, Peter. Thank you. And it's a pleasure to be taking part in this webinar today. So in terms of real estate and money laundering, I think probably the most obvious and common way that a property can be used or exposed to money laundering is through the straightforward buying, selling, or renting of a property using the proceeds of crime. But beyond that, and actually I should say that it's so important because of that straightforward transaction that we are always assessing the source of funds, where the money is coming from, and also the source of wealth of a prospective buyer or a vendor even, or a tenant. And beyond that, we also need to look at how a property is used. So whether a property has been bought or sold, or commonly through the renting of a property, there is a cycle between property misuse, so the use of a property to generate illegal funds, and the way a property is either bought or rented. So for example, if a property is being used as a drugs factory or as a brothel or so on to generate illegal proceeds, you can also expect that that property will have been rented or purchased again through a transaction also using illegal proceeds. And closely linked to that, and something that is a red flag within our sector, is the subletting of a rental property, again where it's without consent. So if you find that a property is being illegally sublet, you can often assume there is a higher risk of laundering associated with that. Why are they subletting? And you would typically find that the original tenant has disappeared and there is a criminal gang or criminal activity taking place to generate proceeds of crime. And within that, and looking at red flags or higher risk activity, when we are engaging with a complex company structure, so a company that may be owned by multiple other companies or links with trusts that are spread across various countries or jurisdictions. And again, where it's more difficult to identify the ultimate beneficial owner or owners of a property, And then you have to question, why has that been difficult to identify them? Why is there a lack of transparency? It's always important to make sure you understand not just the company structure, but the individuals who sit behind that company, and that you're comfortable with their association with the company and with the property, and that you know who they are. And I think the challenge for the market or for our sector is actually more about the due diligence process and the education of the customer. And by that, I mean that, for example, a customer is used to providing due diligence documents to a lawyer or to a financial advisor, and they will often give that information quite openly. They don't always understand that us real estate agents also have to carry out that same due diligence. And so it's about us educating them and helping them understand that, so that we can carry out thorough due diligence and be sure that we understand and know our customer.
Well, excellent. There's a lot to unpack there, and you've certainly hit on some really, important issues. One, the global nature of real estate, the opaque nature in so many countries, and the need for beneficial ownership knowledge and so forth. So thanks for that, Nicola. I'm going to switch to Susan from the United States, talking about global. We're going to cross the Atlantic. Susan, can you tell us a little bit about money laundering schemes involving the real estate sector in the United States that you've seen in your work in terms of prosecutions, investigations, and prosecutions?
Thank you, Peter, and thank you to the FATF for organizing this important webinar. Before I start, I just need to give a quick disclaimer that my comments today are my own views and not the views of the United States Department of Justice. Before I go into some of our cases, I just wanted to give a bit of background and context for those who are not probably familiar with our legal regime. As the FATF noted in the last mutual evaluation report of the United States, which was in 2016, the United States does not have a comprehensive anti-money laundering and counter-financing of terrorism. We do not have measures for real estate professionals as other countries do. We have regulations that require banks and other residential mortgage lenders and some other entities to establish anti-money laundering programs and file reports on suspicious activity, or what we call SARS. But those who are involved in real estate closings and settlements are not required to have these programs or file SARS. Nonetheless, and what I wanted to underscore today and talk about to get at your question, the United States has successfully investigated and prosecuted many cases involving real estate as a way to launder illicit proceeds. We have seen real estate purchases in cases involving drug trafficking, fraud, and corruption, and that's just to name a few types of crimes. We have brought cases using civil forfeiture authorities or actions against the property itself, and we've also used our criminal authorities, of course. Our cases have involved, and this is, I think, another theme worth noting, our cases have involved both residential real estate like mansions and apartments, as well as commercial real estate like hotels and office buildings. So one type of actor that we have seen using real estate to launder proceeds is kleptocrats. And so that's one example I wanted to mention today. The case began as a civil forfeiture matter and then became a criminal one. Back in 2015, the U.S. Department of Justice filed a civil forfeiture complaint seeking the forfeiture of 9 properties in New Orleans that were worth about $1.5 million. The properties, according to the complaint, were alleged to have been purchased with funds that were traceable to $2 million in bribes paid by a Honduran company to a former official in Honduras. Thanks to cooperation with our international counterparts, the Department of Justice then opened a criminal case against the former official in Honduras, his brother, who was in the United States. In 2018, the brother pleaded guilty to conspiracy to commit money laundering. And as part of the plea agreement, the brother admitted that he had conspired with the former official to launder the bribe payments. The funds were laundered into the New Orleans area through international wire transfers and then used to purchase real estate, including a commercial property. The brother was ultimately sentenced to prison, and he consented to the forfeiture of his interest in the real estate, and the court entered a final order of forfeiture on the 9 properties in early 2019.
Great. I think Susan, your comments emphasize the fact that many countries can actually be the repository of dirty money from abroad, and it places, I think, a greater, almost a greater importance on this issue in countries such as of Europe, the United States, Canada, that we not serve as that repository for the proceeds of corruption in other countries in the global south and so forth. It's almost a duty that we have to as global citizens. Well, thank you for that. And I think we'll just go right across the street in Washington, if I may, to the U.S. Department of the Treasury and ask Andrew. Andrew, what's your sense of whether supervisors really understand the real estate sector and how it can be misused for money laundering purposes? And what has been done? What more can be done? We have the updated FATF guidance. Does that really address the outstanding difficulties? Your thoughts on the matter?
Thanks, Peter, and pleasure to be here today, this morning. Yeah, sure, I can, I'll take that question in 3 parts. So, do we think supervisors understand how the real estate sector can be misused for money laundering? The answer to that is yes, to a certain extent. And it's important to note that the understanding of risk isn't just limited to supervisors, but instead to various competent authorities such as regulators, law enforcement, policymakers, etc. While understanding differs by jurisdiction, however, we can make some generalizations about how about the sector. Across jurisdictions, the Financial Action Task Force has determined that there's a low level of anti-money laundering, countering the finance of terrorism obligations being implemented, as well as a minimal amount of suspicious transaction reporting. The effect of these deficiencies may challenge competent authorities' ability to understand risks and provide relevant feedback in the regulated entities on the implementation of the risk-based approach. This, in turn, may impact authorities' ability to enforce for non-compliance, as they may not be aware of the intricacies of the sector. This gap in understanding and consequently enforcement may be exacerbated by the real estate sector's large yet fragmented nature. On your second question, Peter, what more can be done to help the sector? There's various steps that regulators, law enforcement, policymakers, and others can take. A concrete step to take is to prioritize information sharing and information collection to ensure there's a baseline level of understanding across the sector. This includes understanding how the real estate sector operates in your jurisdiction, as well as understanding if there's any gaps in coverage in your anti-money laundering, countering the finance of terrorism framework. For example, in the United States, we've engaged in a phased approach to cover real estate that started back in 2012, focused on finance real estate transactions, because that's where the risk was. Since 2016, however, the United States has utilized an innovative tool called the geographic targeting order to identify, assess, and mitigate money laundering, terrorist financing risk in the sector. The geographic targeting order is a statutory mechanism by the United States Financial Intelligence Unit, known as FinCEN, to collect information from certain financial institutions and businesses in a specific geographic area. Since 2016, FinCEN has issued and renewed geographic targeting orders to address money laundering vulnerabilities in the real estate sector and find the real owners behind all cash transactions purchased by legal entities. This is done by imposing temporary record keeping and reporting requirements on title insurance companies involved in certain cash purchases by legal entities. Law enforcement agencies report that the information submitted pursuant to these geographic targeting orders has resulted in greater insight regarding assets held by persons of investigative interest, have resulted in asset forfeiture actions, and it helped generate leads and identify new subjects to investigation. And on your last question, Peter, do we think the updated guidance will address some of the outstanding difficulties? Yes, that's the intent of the guidance. The FATF guidance provides general and specific information for competent authorities and supervised entities to consider to address the challenges they face in a sector that's only recently come under anti-money laundering, countering the finance of terrorism obligations. Yes. Excuse me. The guidance offers concrete steps to follow by focusing on the overall interplay between the supervised entities and the competent authorities who each play an important role in the sector. For example, the guidance calls for ongoing coordination between supervisors and other government authorities in their engagement with the private sector. Additionally, the guidance highlights the importance of training that includes interaction with the real estate sector, as well as ongoing review of the competent authorities' approach to understanding and implementing a risk-based approach to ensure that there's an overall better understanding of money laundering, terrorist financing risks facing these jurisdictions, which will inform supervisors' ability to ultimately assess and mitigate the money laundering, terrorist financing risks. Thank you.
Well, great, Andrew. That's a lot to unpack. So thank you. I didn't realize I asked so many questions, but I guess I did. But I appreciate that. We've had a request from participants that we speak a little bit slower for those who are not first language English. So I will talk a little bit slower. It's easy for me to do that. I think slowly, so I'm going to talk a little slower, but just for the information of my distinguished panelists. Thank you. Andrew, in particular, I was taken by the reference to geographic tracking orders. The GTOs in the United States have a lot of appeal, I think, because we often hear the argument that a paper burden is imposed on industry if we have a one-size-fits-all reporting, but your geographic tracking orders permit very targeted reporting from a particular geographic region of a sector. And you don't have to actually look at the entire country with the same broad brush. You have the ability to look at a particular area. And I gather from your comments that has been a successful tool.
That's right. Yes. No, it's been a successful tool in that regard, and it's gotten really helpful information to law enforcement about how the sector is being misused, and links specific transaction information with the purchase of real estate, and helps shine a light on those companies that are being misused by bad actors, and gets behind those entities and really allows law enforcement to figure out who's using them, what they're doing, and prevents further misuse.
Great. Yeah. Thank you for that. Well, we're going to cross the Atlantic again, this time going to Germany, and bring Christine into this discussion from the FIU in Germany. And so, Christine, I'm kind of curious. Some countries, national authorities have already put in place strategies and more effective ways to mitigate the risks that we're talking about here today. Can you tell us a little bit about what has been occurring in Germany in response to the risks that we've identified or that have been identified in real estate?
Thank you, Peter, for your question. And yeah, it's a pleasure to be here. And with regard to your question, I would like to mention that in Germany, apart from financial institutions and notaries and lawyers, also real estate agents have been subject to the German AML Act since 2017. And also other public authorities like, for instance, the Revenue Service or tax authorities, as well as the supervisory bodies for various sectors, are also required to report suspicious transactions if they identify any. Notaries in Germany play a mandatory role in real estate transactions because you need a notary to register an owner's right to the land, and the notary will need to certify this. At the same time, legal professions have a high level of professional secrecy laws, which is rightfully so and is a valuable asset in itself. But still, due to this, their reporting behavior in terms of STRs raised to the Financial Intelligence Unit in Germany was somewhat left to be desired, as they often felt that their professional secrecy kept them from raising such STRs. As a consequence, the German Ministry of Finance, and as a lawmaker, introduced a reporting obligation for legal professionals with regard to real estate transactions, which entered into force in October 2020. And this now requires legal professions to report transactions following without violating their professional secrecy. I have to mention that this is rather a rule-based approach than a risk-based approach, because this ordinance or law provides specific cases in which the lawyer needs to raise an STR. And this has proven quite effective to avoid conflicts of the legal professions with their professional secrecy. In 2019, notaries raised 17 STRs, and in 2021, the number amounted to over 6,000. So there you see the difference. And such STRs, of course, are especially valuable if several parties raise STRs related to the same transaction. So you receive several pieces of a puzzle. And if a real estate agent, a notary, a financial institution, and say the tax authorities send STRs relating to the same transaction or to the same individual, you get a good picture of the scheme behind it. And there was a case where the buyer was the fiancé of an individual which was linked himself to a group of criminals and which committed a huge number of investment frauds. So this is something I would like to highlight. And let me also briefly introduce to you the German model of a private-public partnership, following the model of such PPPs in other countries, and also as a result of the FATF visit in 2010, Germany founded such a public-private partnership in 2019, the so-called Anti-Financial Crime Alliance. And this has set up a specific working group with regard to real estate, and includes real estate agents, financial institutions, supervisory authorities, and also the Federal Criminal Office in Germany. In contrast to the financial sector, which has only got one supervisory body in Germany, the real estate sector is not only in itself fragmented, but also with regard to the supervision. This is the reason being that of the federal system in Germany and the different federal states we have. So there is a huge fragmentation. And real estate brokers nevertheless play a very important role. So the aim of this PPP also is to provide the brokers with more information on how to conduct due diligence, and really to highlight the important role they play in the fight against money laundering. And also, do not forget about terrorist financing in this regard. We only have spoken about money laundering so far, but the other part is as important. And so far we have published 2 white papers, one on the general risk in the real estate sector with regard to money laundering and TF, and one on a specific aspect, which is money laundering through criminal members of clan groups in Germany. And these cases also comprise sanitized case studies. Unfortunately, they are only in German. So I'm sorry for this. And there are some other measures, but maybe later. And I would like to give back to Peter now.
Well, thank you, Christine. And you've done a great job of explaining the German environment in English. So thank you for that. You've raised a number of issues. One, of course, is the number of different players in the real estate market. You've got real estate agents, you've got real estate brokers, you've got notaries, there are lawyers. So it's a very complex market, complex segment of the economy. And that also raises the issue of lawyers, which I know many countries are struggling with reporting by lawyers and the potential conflict with solicitor-client privilege. It has been a problem and continues to be in my country, Canada, where we do not have reporting. I know in the United States, the United States is looking at enabler legislation, trying to deal with professionals who could be enablers. And maybe I'll just throw that out to our American colleagues to see if they have any comments on the reporting by lawyers and where they see that going and the importance of it. Susan or Andrew?
Well, Peter, as you said, there have been bills in Congress that have looked at this. I think the United States in its strategy on countering corruption also mentioned enablers. And so I think there is definite awareness of the issue. We can't really comment on the probabilities of passage in Congress. It's a different branch of government here in the United States. But I do think what we call gatekeepers generally has been an area of focus. And I think that, as Andrew mentioned, we've used the GTOs. We have also, there's an initial rulemaking related to real estate agents. So there's definitely, I think, awareness of the role of gatekeepers. I would encourage the audience to look at our National Money Laundering Risk Assessment that came out in earlier this year. It has a lot of detail on gatekeepers and initiatives. So again, I think it's something that we're very aware of.
Yeah, definitely. Thank you, Susan. And I do want to get Thomas in the discussion, but quickly, I'm going to go back to Nicola, because I know that the United Kingdom does have third-party reporting with respect to lawyers or solicitors. And it's a slightly different model than what we just heard from Christine. Would you like to comment on that briefly, Nicola?
In the sense of the reporting, I think it's, well, we have multiple avenues that we can work together with lawyers, if this is what you mean, Peter. And so we have the opportunity to complete our own verification, which is strongly recommended, and our own due diligence. But you can also obtain reliance from lawyers or other regulated professionals as well, where if you believe that they have completed their due diligence, you have the ability to rely on their checks, but the onus and the responsibility sits with you as the real estate agent. So if they haven't done it correctly, or if they are, as you mentioned already, a professional enabler, you have then taken on that risk, and you are potentially liable for failures in money laundering checks. So whilst it is an avenue for us, it is not necessarily the best avenue to take in all cases. But it does give us ability to have more transparency between ourselves and a lawyer with the permission of the client to be able to have visibility of due diligence and be able to have more visibility about the customer and to understand what we're doing, if I've understood your question correctly.
Oh, that's great. Thank you very much. Well, Thomas, let us continue this discussion on public-private partnerships that Christine launched. So from your perspective, what are the main challenges, preventing criminals from using real estate, to launder their proceeds? And how does the public-private model assist? Does it overcome some of these challenges? And what do you see in terms of the future of compliance in the real estate sector? Over to you, my friend.
Thanks a lot, Peter. Yeah, it's a pleasure to be here. And for the audience, English is not my main language, so I will speak slowly at the end. Yeah. Let me mention a few points to your first question, and some points have been already mentioned from Christine, or especially from Nicola. You mentioned a lot of points I wanted to mention. So at the end, I will keep my focus on the points I get confronted in my work. I'm also the money laundering reporting officer from Paul, one of the biggest real estate brokerage companies in Europe. And we have around 1,700 real estate agents. So a lot of stuff to do, a lot of transaction to oversee and to check. And so the most important point is there are still numerous legal structuring options for domestic and foreign legal entities to conceal the source of funds and the source of wealth. And that was also what Nicola said. I think this is one of the main issues we have, to find out where's the money from. They want to invest in the property, so the source of funds, and where to have their wealth. Yeah, is it plausible where they have? And to find this out is, I think, it's a big challenge. But this comes with a different and insufficient risk interpretation. That's what we have in Germany through the different supervisory authorities we have in Germany. I give you an example. The real estate agents, we have 26 different supervisory authorities, 26 in Germany, and every authority have their own legal rights to interpret risks. And this is the main challenges we have. And of course, most small real estate agents, they have a lack of internal security measures. For example, the training of the real estate agents and the regular risk analysis and all the things. And in connection with this low risk awareness regarding the lack of internal security measures, there's also a low willingness to submit a suspicious action report or a suspicious transaction report. We have to difference between an SAR and an STR. I always read like just everyone is talking about an STR, but you have also clients who behave suspicious. There is no transaction. They behave. You submit an SAR and then you cut off the relationship or the businessship because you know he's maybe dealing with money laundering, so you don't want to do business. So it's an action report and not a transaction report. To clarify that, and if you analyze like a client, or if you do a client due diligence, keep in mind it's maybe a suspicious action and not a transaction. A transaction comes if you sell the property or if you're going to sell the property. And another problem is the possibility, and that's the last point to this question, the manipulation of prices. And I mean with that, the over and undervaluation of property. There are no common rules you can use to find out, is it the right valuation or not? And so you can, it's like, I always say, it's like a wild, wild west. You can say this property is 1 million, or you can say it's 2 million. Who can prove the opposite? So if you go for an undervaluation, for example, you are maybe in the first stage of money laundering. You have the 3 stages of money laundering everyone knows: placement, layering, and integration. And so if you have like an undervaluation, you are in the first stage, in the placement phase, or the placement stage. That means there's a high potential to find out what is behind where the money comes. If you have like an overvaluation, you are in the third stage, in the integration stage. From that point, it's difficult to find out where the money is from. So if you go in analysis, find out where you are, if you are an over and undervaluation. And if I come to your second question about the public-private partnership in AFCA, I can say definitely AFCA has been like a really, really positive development in making like available a wider range of risk information to obliged entities, especially for the non-financial sector. It's really important. And Christine and I, we are leading the working group 3, money laundering in the real estate sector. And we already published like 2 documents. Christine, you already mentioned the documents. The last document we published last week, it's about money laundering in the real estate sector, focusing on clan crime, or in the context of clan crime. It's like the first document, it's like a guideline, and the first document you can see about clan crime in connection with real estate. And it's really interesting typologies we find out about that. And from my point of view, AFCA allows to analyze and evaluate current market risks in a holistic approach. Why? Who are the members of this working group? Christine mentioned, we have like law enforcement, we have the authority, we have ministries, and we have the chamber, the Federal Chamber of Notaries, we have real estate agents, and we have the financial sector, as a lot of banks. We have the FIU, of course. So you have like a big panel of professionals
Right.
And this is what I mean with a holistic approach to analyze.
Well, that's great, and I think we're starting to see similar public-private partnerships in different countries. I know it's starting here. I know we've seen it in the United States. We're getting a lot of great questions from the audience, more than we have time for. We've got about 10 minutes for questions before we go to key takeaways. So there is one question here that's been put out to all the panelists. So I'll just read this question and see who would like to take a run at it. The purchase of real estate provides the opportunity to launder big amounts of money. However, real estate agents, brokers do not have the means to carry out extended due diligence, EDD, like banks do. So I guess the point being they don't have the research capacity and the resources. So what level of due diligence can be expected from real estate agents, brokers, in particular, if a purchase is made with cash? Who would like to take that one on? Nicola, I see you smiling.
I can probably start with that one as a real estate agent. It is correct that the challenge for us as agents is we do not have the same visibility of a transaction that a bank might, because we don't have that insight into transactional history. But it doesn't mean that we can't obtain some transparency. And the whole process is called Know Your Client, because it's really important to have a holistic, a wide view of the client, the customer. And by that, the due diligence you can carry out, of course, is about checking their identity and what I would class as the basic check, but enhanced due diligence is about looking at their source of wealth. So is that person sort of somebody who appears to have the wealth that would enable them to conduct in such a transaction? And then also looking at the source of funds. So will that person give us access to their banking statements if we need to, or if they are a cash buyer, how has that cash come to be in their bank account? Because quite often we will be presented with a bank account that shows a large sum of money, but that's not our question. Our question is, how did the money come to arrive in the bank account? So we will be looking at understanding how they generated that money. And if this is a serious buyer, they will eventually provide that information. The challenge is often about helping them to understand we really need to see this. Sometimes they feel that it's the agent going too far, but actually once they are educated around the legal requirements, if they are a genuine, serious, reputable buyer, they will share that transactional history with us. We do have more methods now, such as electronic or digital verification systems that allow us to use open banking, for example, if we work with such providers. So that is now an ability to us as well. Some agents will take that up, some may not. It's not a legal obligation to do so, but it is a way that you can start to have more transparency.
Great, thank you. Well, I'm sure everybody would like to contribute to that one, but we've got a number of questions. So I'm going to put the next one to both Susan and Andrew, and it really is about the issue of international cooperation and what form of cooperation exists when we deal with real estate investigations involving money laundering and real estate. Either of you or both of you?
Well, from the law enforcement perspective, I think, I can speak to cooperation generally. I think cooperation is common in all types of cases, not just real estate. So I think also I would underscore that international cooperation is vital to the success of many of our cases. As money moves around the globe, and I mean, to touch on something that Nicola said, understanding that, where that source of funds comes from, if it comes from another country, we may need to get information on that. So that international cooperation is vital. I think the FATF, for example, has done work in this area, and it's, both informal and formal cooperation are important. And I think, as we see money moving around, it's just, our cases frequently involve that cooperation. And I think the case example I talked about today is a good example of that. You know, the international cooperation really helped us advance that case, and it ultimately led to the forfeiture of those properties that had been obtained through illicit proceeds.
Great. Andrew, anything to add to that?
I don't have much to add. I would defer to Susan's significant experience in that space. You know, I would just say that we recognize that international cooperation is really vital for, you know, investigating various different types of cases, to include money laundering through real estate. So that'd be my comment on that. Thank you, Peter.
Great, thank you. And I'm going to just go back to our previous question for a minute, and would be interested, the participant would be interested in knowing from Christine, the same issue about due diligence. What form of due diligence can real estate agents undertake? So maybe we'll just retrace our step and ask you, Christine.
Of course, it depends also on the size and possibilities of the specific real estate agency. But I think there's a lot from, you know, open information on the internet where you can kind of check whether the individual or the company approaching you has got a legitimate explanation where the wealth comes from. And if you collect this information together and maybe also have the opportunity to use a commercial database for this, you will be able to see whether there are any implausibilities in such cases. In Germany now, we've got a law which forbids to pay to use cash in real estate transactions. But I can understand that if you're the first mover in an environment where nobody or hardly anybody asks questions about the source of funds, this is really, really difficult, because they just then go away and look for another real estate agent in a transaction. But I would like to let you know that this is really worth it, and that there are many possibilities to conduct checks on the background of the customer. And if something doesn't look right, it's most likely it's most likely not plausible. So do trust also your gut feeling, and do not rely too much on software systems for checks. So I think try to build a picture from the information you can get a hold on, and then you will come up with a more likely with a yes or no decision on whether this is a legitimate customer, and this will help you to look for the right customers.
Great. Well, look, we're hitting all sorts of great topics. I'm mindful of time. Our last question really takes us to the future. And it is this: can you share your comments regarding the misuse of cryptocurrencies and crypto-based loans for the purchase of properties? Now, I don't know to what extent you're seeing crypto-based purchases, but maybe if we could just talk about the impact of crypto in this sector. And we've only got 1 or 2 minutes, so would someone like to take a try at that question? Thomas, I see you looking in my general direction.
Yeah. I didn't hear my name, so the question was hitting up to me. I was listening so intense to your question that I didn't hear my name.
Oh,
yeah.
Sure, really the issue of cryptocurrency.
The question I already heard. It's about the crypto. We have a lot of cases by our company about paying the money for the property with cryptos, and for example, they show that they have a wallet about some bitcoins, 10 or 18 bitcoins, and the moment where one person or a customer wants to pay with bitcoins, we have to conduct enhanced due diligence. That's the first point, but from next year on April starting, it's in Germany forbidden to pay with cash or with Bitcoin or with gold or platinum the price of a property. And notaries are not allowed to make an owner transfer if there's cash, cryptos, etc. involved in a property transaction. So this question only carries me till next year, end of March, and then it's over with that. And if a customer wants to pay, or he says, yeah, my money comes from cryptos and whatever, then I say, thank you, goodbye. We cannot offer you this property. So that's a good thing. It's a new Sanctions Enforcement Act, which comes next year on January starting. But before that, there are a lot of countries who still have this crypto things. Have a look on the wallet and on the history of the wallet. Find out what kind of transaction in this history of wallet. It's really easy. It's not so complicated. It sounds a little bit complicated. Just have a look and ask for the wallet history. And if you get this wallet history, you can make this plausibility check. It's not illegal to trade with cryptos, but you have to check if everything is plausible. And so ask for the wallet history. And many of the customers who have a wallet history and they don't want to send the history, then you know there's something working which is not correct.
That is a great tip, and I'm glad I turned to you on that question. Thank you. Well, we've got about 10 minutes, actually 9 minutes left. So I'm going to ask everybody to give a 1 or 2 minute takeaway from your perspective, and what key takeaways will you leave with the audience? And I'll start back in the same order that we began with Nicola.
Thank you, Peter. I think my takeaways would be, number one, make sure you have a good, thorough risk assessment. It's really important to understand the risks within your own area, field, geography, and market. And this way you can focus your resource where you deem that risk to be highest, and where you think that the EDD is most needed. Also, touching on the point that Christine made about not relying too heavily on electronic systems, whilst they are helpful, my other takeaway would be always make sure you have independently verified the information so that you are satisfied it is genuine, and you are satisfied that there are no circumstances that make you feel uncomfortable. As to Christine's point, gut instinct is a huge part of anti-money laundering verification checks. And on that note, think about whether the transaction and the customer and the whole relationship makes sense. Is it logical? Is it plausible? Does this make sense to you? And I think they are good foundations for building a robust customer due diligence anti-money laundering system within your remit.
Excellent. Thank you. Thank you. Susan, over to you.
Thank you, Peter. I would just emphasize that it is possible to bring these cases, as we've talked about today. You can use authorities to prosecute illicit actors involved in these kinds of cases. I think if you look at our US, our money laundering risk assessment, you'll see just a number of cases involving the real estate sector. So I do think it's an important area of focus. The ways to get at this are the ways to get at a lot of other things in the illicit finance world. Just follow the money, and you can see where it leads. I would also just note, to build on what Andrew talked about and on your questions on the geographic targeting orders in the United States, I think as we've highlighted publicly, where we have information from those GTOs, it has been very beneficial to law enforcement. So tools like that can be useful.
Great. Thank you very much. Andrew, over to you.
Yeah, thanks, Peter. I think it's important to note that, this is a really unique sector, that there's not more, it's different than a lot of other sectors, such as, financial institutions and banking sector. It can be difficult to do, do the same type of due diligence that you do in banking, because the transactions that occur in real estate are more occasional, so it can be difficult to get that information and stuff. So it's for that reason it's really important to engage in information sharing and information collection and really collaborate to the as much as you can to ensure there's a good level of understanding of the risks facing the sector, as well as to the best way to go about actually doing something about it to assess and mitigate the risks. The FATF guidance that came out gives some concrete steps that for people can consider to do that. And it's really useful. So that would be my big takeaway. Thank you, Peter.
Great. No, thank you, Andrew. And Christine, over to you.
Yes, going back probably to what Andrew said, I think it's important to remember that you can take risks. You must take risks in business, but of course you need to manage these risks accordingly, and especially with regard to identifying the ultimate beneficial owner and looking through complex company structures. It's important that you ask the right questions so you get to the real essence of the case. And also, if you decide then based on this to raise an STR, please remember that you must not notify the client that you raised such an STR, because this is regarded as tipping off. And for instance, in Germany, it's even forbidden by the AML Act that you inform the customer about the fact that you raised an STR. And remember, the questions you ask the customer might vary with the sort of property he's looking for. Yes, that's it from my side. Back to Peter.
Great. Thank you, Christine. And Thomas, it's between you and me. We have 3 minutes, so you get 1.5 minutes, and then I get to wrap up. Over to you, sir.
No props. I have only 3 points I want to mention. First point is we already mentioned the main focus was always on the KYC process. The future focus should be on source of funds, determining the source of funds and the source of wealth. The main part of my suspicious transaction reports are because of an irregular source of wealth and source of funds. So have a look on the statements, ask for statements, income tax certificates, notarized statements, and maybe money comes from sale of company, whatever. Ask for the documents. You will get the documents. This is my kind of experience. The second point is what already Christine and Nicola mentioned. Ask the right question. I was a former detective in counterterrorism, so everything comes about asking the right question and wait for the answer. And if you have like an answer which not fits to the things you have on your table, then you are in an enhanced due diligence. And then you can ask for more information, formulate hypotheses, and find out what is a predicate offense, what could be the predicate offense, and then go on an exclusion principle to find out what could be the predicate offense be at the end. And what I always say is an investigation is like a puzzle, and a STR is like a piece of the puzzle. And the more facts, and I mean the pieces of the puzzle there are, the clearer the criminal modus operandi becomes, especially for the law enforcement agency. And yeah, that's from my point.
Great.
And I think over to you, Peter.
Well, thank you so much. Well, in the course of this hour, we've talked about public-private partnerships, enhanced due diligence, geographic tracking, targeting orders, enablers, international cooperation, cryptocurrency. It's a huge area. My thanks to the Financial Action Task Force for all the work that it is doing, for sponsoring this webinar, and also for its guidance to professionals around the world. I'd like to thank everybody that has taken time out of their day to be with us. Thank you. And thank you to this esteemed group of panelists, Nicola, Thomas, Susan, Andrew, Christine. It's been my pleasure to moderate this webinar. I thank you for attending, and I thank you for being panelists. Have a great day.